Crypto can be one of the most exciting things to invest in. Watching your portfolio move up by double-digit percentages can be exhilarating, but the ride back down again can be tough to stomach. For those who'd rather not subject themselves to extreme portfolio swings, there is an alternative, however. Investing into crypto-related stocks can provide you with the exposure you need without much of the drama. So today, we'll tell you about 5 different crypto stocks, how each company is involved in crypto, and how the bull market could result in some serious gains for them. I'll start by saying that I'm not a financial advisor and nothing in this video should be taken as financial or investment advice.
Financial advisor is not my dream.
This is simply educational content sprinkled with our classic Coin Bureau charm. Now, you may be wondering why you should consider investing into a crypto-related stock rather than just sticking to cryptocurrencies themselves. Well, there are a number of reasons. The first is perhaps the most obvious: diversification. Crypto is a high-risk investment, in case you hadn't noticed, even if you're investing primarily into Bitcoin, which is widely regarded as the safest crypto. That is simply because of crypto's volatility. Spreading your portfolio over different but related asset classes is therefore a great way to manage these risks, and choosing crypto stocks reduces direct exposure. Another reason to consider crypto stocks is for simplicity. It's much easier to dabble in the stock market than it is to navigate the world of crypto, particularly for non-crypto natives. You'll also be exposed to the companies that will benefit from crypto's overall growth rather than trying to nail down specific projects. And, ironically, crypto-related stocks can sometimes outperform large-cap cryptos like BTC and ETH. Take, for example, Microstrategy, which is up over 115% year-to-date compared to BTC, which is only up around 40% year-to-date. Besides bringing in double the gains, the fact that MicroStrategy actually has earnings also makes it appealing to traditional investors. On that note, you could also consider crypto stocks from a regulatory standpoint. The uncomfortable truth is that many investors are put off from getting involved with crypto due to a lack of clear regulation. Stocks, on the other hand, don't carry as much uncertainty. Crypto stocks also benefit from being far more tax efficient than cryptocurrencies. That's simply because tracking crypto transactions to work out how much you owe can be an absolute nightmare. Thankfully, there are crypto tax tools out there that can make this easier, and you can get discounts on some of the best ones by checking out the Coin Bureau deals page. The link to that is in the description. Anyway, the final reason you might consider crypto stocks is because they can be included in retirement accounts. This is even better when you consider that many of these companies will generate their own cash flows, helping them to secure their futures and, by extension, helping you to secure yours. And by the way, if you're enjoying the video so far, smash that like button to give it a boost, punch that subscribe button and flick that notification bell too so you don't miss our next one. So, now that you understand their advantages, let's take a look at 5 crypto stocks that you should have on your radar. The first crypto stock that you should watch is Marathon Digital Holdings with the ticker MARA. Marathon Digital was originally a patent holding company called Marathon Patent Group. It was founded in February 2010 and is headquartered in Florida under current CEO Fred Thiel. Back in 2021, the Marathon Patent Group invested in BTC and Bitcoin mining equipment and established a joint venture with a coal plant in Montana to power a Bitcoin data center. It then rebranded to Marathon Digital to reflect its new direction towards digital assets. Marathon has since focused on building the largest Bitcoin mining operation in North America, while staying environmentally conscious. The company primarily uses green energy, adopting a 2-phase immersion cooling system, which is a fancy way of saying they dunk their computers underwater. Alright, it's a bit more technical than that, but the point is that it decreases the environmental impact while keeping the company's overhead costs down, since they don't need to buy and maintain heavy-duty cooling fans. Anyway, since turning to crypto, Marathon Digital has grown at an exponential rate. Back in December, it acquired 2 more operational Bitcoin mining sites and has become the largest publicly traded Bitcoin mining company by market cap. And according to its website, Marathon also holds more than 20,000 BTC, the second highest holdings of any publicly traded company behind MicroStrategy. More on them later. And in September last year, the company expanded its reach by mining Casper's CAS, marking the first time the company has diversified into a different cryptocurrency. By June, Marathon had mined more than 93 million CAS coins. But perhaps most importantly, CEO Fred Thiel recently announced that Marathon will be hodling 100% of all its mined BTC. In a Q2 report published on the 1st of August, he said, quote, "This reflects our confidence in the long-term value of BTC and our belief that it is the world's best treasury reserve asset." While this is super bullish, Marathon also sold 50% of its BTC in Q1, and there's no mention in the Q2 report of hodling CAS. Regardless, this is one of the ways Marathon could outperform in a crypto bull market. Obviously, a Bitcoin mining company not selling its BTC means the company's valuation will increase. It's not like they're mining small amounts of BTC either. In Q1 of this year, Marathon produced more than 2,800 BTC, and in Q2 it produced just over 2,000. The reason Marathon was able to do this was because of its impressive hash rate, which has likewise grown exponentially. This is where things get a bit technical, so bear with us. According to that same Q2 report, Marathon's average operational hash rate is now 24 exahashes per second. What the heck is that, I hear you ask? Well, in simple terms, a hash rate is how quick a computer can solve a mathematical puzzle called a hash to validate a block. 1 exahash is equal to 1 quintillion hashes, which, believe it or not, is a real number. So, Marathon's miners can solve 24 quintillion puzzles per second. In layman's terms, they're hella quick. Now, the second crypto stock to watch is Coinbase, under the ticker COIN. As you're no doubt already aware, Coinbase is the largest crypto exchange in the US and is the second largest exchange in the world by daily trading volume, with Binance being the first. Coinbase was founded in California by Fred Ursum and Brian Armstrong in June 2012. Fred left in 2017, and Brian serves as CEO. Interestingly, Coinbase has adopted a remote-first model with no physical offices since its inception. Now, the exchange has seen so much adoption for many reasons. For one, it offers a much more user-friendly interface than the vast majority of its competitors, which are often quite clunky by comparison. Coinbase also offers other customer-friendly features, including its own Visa debit card that lets you spend your crypto, and a Learn and Earn section that lets enthusiasts discover more about crypto projects and protocols while earning some free crypto along the way. Coinbase also had a 50-50 partnership with Circle, sharing control of one of crypto's most popular stablecoins, USDC. This was until August 2021, when Coinbase opted to relinquish full control to Circle in exchange for a greater revenue share of the reserves and a stake in Circle itself. This revenue comes in thick and fast, due to the assets backing USDC generating interest. For those unaware, stablecoins like USDC are backed primarily by government debt, and this government debt is currently earning a yield of around 5% per year. With a market cap of $33 billion, this translated to $150 million of revenue for Coinbase in Q2 of this year alone, the sort of passive income the rest of us can only dream of. Now, Coinbase went public in April 2021, and it certainly hit the ground running. Prior to Coin being listed, Nasdaq had set a reference price of $250 per share. It actually closed its first day at $328. To be fair, prices fell during the crypto bear market, but Coin stock has been in a strong uptrend since January 2023. Heck, Goldman Sachs even described it as, quote, the blue chip way to gain crypto exposure. That's because the trading volume on popular altcoins translates to revenue for Coinbase. So, when prices go crazy during a bull market, Coinbase and Coin shareholders will reap the benefits. Another reason why Coinbase is so popular is the USDC revenue we mentioned a moment ago. If USDC grows exponentially during the bull market, Coinbase will stand to benefit from that too. Lo and behold, USDC's market cap is already growing, foreshadowing larger revenues for Coinbase in the future. And of course, there's another crypto project that Coinbase has on its side. The Base blockchain, Coinbase's very own Ethereum Layer 2, has also seen some insane growth, amassing over $7 billion in total value locked, or TVL. Not bad for a chain that launched in the midst of a bear market. And you know those spot ETFs you've been hearing so much about? Well, Coinbase happens to be doing most of the custodial work for those too. This is likely the reason why the company's Q2 revenue was over $1.4 billion, beating market estimates. It'll be intriguing to see just how far Coin can go once the bull market goes parabolic. Okay, the third crypto stock to consider is Block's SQ stock. Now, Block was founded way back in 2009 by Tim McKelvey, Tristan O'Tierney, and Jack Dorsey, who you might recognize as being Twitter's co-founder and ex-CEO, and, oh yes, a dedicated Bitcoin maxi. Block was formerly known as Square before rebranding in December 2021, shortly after Jack stepped down as Twitter's CEO. Anyway, the reason Square rebranded to Block was to represent the company's shift towards, yep, you guessed it, blockchain, specifically blockchain infrastructure. Prior to that, Square was a payment platform targeting small and medium-sized businesses, creating a small square-shaped device that allows merchants to accept card payments via smartphones or tablets. And Square still plays a big role in Block's overall strategy, which is to become an infrastructure company consisting of 5 different divisions. As Jack Dorsey describes it, Block is, quote, an ecosystem of ecosystems, with each division connecting in some way. These 5 divisions are Square, as well as Cash App, which offers peer-to-peer in-app transactions, and it also owns 87% of shares in Tidal, a popular music streaming service competing with Spotify. But, Jack being Jack, the company also has 2 more divisions aimed at Bitcoin. These are Spiral, which builds and funds open-source projects aiming to boost Bitcoin adoption, and TBD, a Bitcoin-focused decentralized environment for developers to build DeFi applications. In December last year, Block also launched BitKey, a self-custody BTC hardware wallet. They also have Weebly, which makes it easy for web developers to create websites, and as of January 2022, Block also owns Afterpay, a buy now, pay later service. Quite the portfolio. Incidentally, we discussed the dangers of buy now, pay later solutions in one of our recent videos, and you can learn more about that using the link in the description. Anywho, Block's crypto developments don't stop there. More recently, Block has made several announcements, including the development of its own Bitcoin mining system, complete with a mining chip that's just 3 nanometers in size, and an announcement that 10% of gross profits will be invested monthly into BTC as part of its DCA strategy. If you're wondering how much that is, Block's Q2 report revealed that its gross profit was $2.2 billion year-on-year, up 20% from 2023. Now, given all the many pieces that make up Block's puzzle, it's clear the company has multiple revenue streams that will help it to outperform during the crypto bull market. Primarily, though, most of this money will come from Square and Cash App. To put things into perspective, Cash App generated over $4 billion of revenue in Q2 alone, which is pretty impressive. And if being general payment platforms wasn't already enough, Square gives merchants the opportunity to accept crypto as payment, and Cash App allows direct in-app crypto purchases. This gives customers a much smoother experience, and the fee revenue this will generate will be massive, once people actually start using crypto for payments, of course. But even if crypto takes a turn for the worse, many of the divisions would survive comfortably while crypto finds its feet, making Block's SQ stock a potentially good diversifier. The fourth crypto stock to watch is perhaps the most obvious, especially if you've been in this game long enough to know who Michael Saylor is. I am, of course, talking about Microstrategy's MSTR. Now, we actually put out a video not too long ago about Microstrategy's approach to Bitcoin, and we'll leave a link in the description for you to check that out after this one. It is well worth the watch, even if I do say so myself. For now, though, here is a quick TLDR. Microstrategy was founded way back in 1989. It specializes in business intelligence solutions and mobile app developments that aim to boost a business's efficiency. But over the last few years, Microstrategy's MSTR stock has been seen as more of a leveraged BTC bet. That's because in August 2020, Microstrategy's founder and now former CEO Michael Saylor swallowed a massive orange pill as he led the company's first purchase of $250 million worth of BTC. The reasoning for this purchase was to protect the value of the company's asset reserves, rather than sitting on $500 million of a devaluing fiat currency like the USD. And as a fun fact, this attracted a lot of media attention and was a key reason why Jack Dorsey chose to follow in MicroStrategy's footsteps, buying up $50 million worth of BTC for Square around a month later. Anyway, since that initial purchase, Saylor has made BTC MicroStrategy's primary focus, buying up a boatload of the digital gold over the years. In fact, when our MicroStrategy video came out a short while ago, the company held 214,246 BTC. It now holds 226,500, according to a recent tweet by Saylor, anyhow. To say Saylor is a long-term hodler would be the understatement of the century too. He's made it perfectly clear that MicroStrategy will never sell any of its BTC because he believes there's no point in swapping BTC for a weaker asset. Heck, he even stepped down as company CEO to become its executive chairman purely to give himself more time to focus on raising Bitcoin awareness, while stacking more sats of his own, of course. Naturally, this means that MSTR's price is heavily correlated with BTC, and this is precisely why it will perform well in the crypto bull market. As BTC's price soars to new all-time highs, so too will MicroStrategy's stock value. And this bullishness could even become the catalyst to create enough FOMO for even more bullishness. You'll recall MSTR has even had periods where it outperformed BTC. MSTR's performance will likely put MicroStrategy in the spotlight, which will draw in even more investors. It's also likely to attract people to BTC itself, which would put BTC's price up, which in turn would boost MSTR's price. Then the increased profits that MicroStrategy will make will result in more BTC buys, which creates more bullish news, and the cycle starts again. While nothing stays green forever, it's easy to see just how green this approach could become. Just keep in mind, though, that MicroStrategy has a habit of selling shares to fund its BTC purchases. This could suppress MSTR's performance, but so far, it's had zero effect. Now, the final crypto stock to watch is PayPal's PYPL. PayPal was founded way back in 1998 and has since become one of the largest payments companies in the world, among giants like Visa and American Express. PayPal rose to prominence in 2002 when eBay acquired the company shortly after its PYPL stock went public, whereafter it became the de facto payment method for the online auction giant. And in the years that followed, PayPal went from strength to strength. Obviously, PayPal has since expanded into crypto. Multiple services have now integrated PayPal to introduce direct crypto purchases, from on-ramp solutions like MoonPay to popular wallets like MetaMask and Ledger. But of course, PayPal's biggest foray into crypto has been its rollout of its own stablecoin, PYUSD, which launched in August last year. We actually took a closer look at PYUSD in one of our recent videos. The link is in the description, as always. Anyways, PYUSD was launched as an ERC20 token issued by Paxos. In May, it expanded to Solana's blockchain, and PYUSD's growth is likely to continue thanks to PayPal's focus on regulatory compliance. That's simply because investors will likely feel more comfortable parking their funds with PYUSD than with its competitors. It also helps that we know what's backing PYUSD. To be blunt, that's not something we can say for all of the others. If you were wondering, PYUSD is fully backed by US deposits, short-term treasuries, and similar cash equivalents. And yes, these assets also earn a yield, boosting PayPal's revenues. Now, PayPal's move into crypto is a key reason why its PYPL stock will likely do well in the bull market. Not only will PayPal's integration into various crypto services result in massive fee revenue streams, but the assets backing PYUSD will be earning ever more interest in the background, much like Circle's USDC that we mentioned earlier. And there's some mad money to be made too. Take a second to consider that last year, Tether made more than $1 billion in profit in Q1 alone. This revenue is much needed for PYPL, which has yet to recover to levels seen before the post-pandemic bull run. Considering that Juniper Research estimates that stablecoin payments revenue will exceed $187 billion by 2028, PayPal's future suddenly looks a lot brighter, and hopefully its stock will reflect that in the coming crypto bull market. So, there you have it, folks. 5 crypto-related stocks that should do very well when crypto resumes its upward trajectory. That's all for today, so if you enjoyed this video, help us out by hitting that like button to give it a boost. Subscribe to the channel if you haven't already, and ping the notification bell so you don't miss our next one. If you're looking to maximize your crypto gains, then the Coin Bureau deals page is where you want to be, because it has trading fee discounts of up to 70%, sign-up bonuses of up to $100,000, and discounts on some of the best hardware wallets out there. The link to that wonderful resource is, of course, in the description. Thank you all so much for watching, and we will see you next time. This is Guy, signing off.